Most people think opportunities appear when everything feels safe, but history shows the exact opposite. The greatest opportunities usually arrive disguised as uncertainty, confusion, fear, and instability. And right now, the world is entering one of those moments again. What we're witnessing is not just another market fluctuation. It's not just inflation. It's not just politics. It's not just temporary volatility. It's a much bigger shift. A shift in the global financial system itself. And the uncomfortable truth is this: most people won't recognize what's happening until the opportunity is already gone. Because human nature never changes. People wait for certainty. They wait for headlines to confirm the move. They wait for everyone else to agree. But by the time the crowd feels comfortable, the smart money has already positioned itself. That's why moments like this rarely come twice. And in today's video, we're going to break down why this current environment could become one of the most important wealth-building windows of the next decade, and why ignoring it may become one of the biggest financial mistakes people make. But before we begin, if you value deep economic analysis and long-term investing psychology, make sure to like this video and subscribe to the channel. These conversations matter now more than ever. Now let's begin. When you study history carefully, you start noticing patterns. Empires rise, currencies strengthen, debt expands, confidence grows, and eventually, excesses appear. Governments borrow too much, markets become addicted to cheap money, asset prices disconnect from reality, and ordinary people slowly lose purchasing power without fully understanding why. This has happened repeatedly throughout history, not once, not twice, but over and over again. The names change, the countries change, the technologies change, but the cycle remains remarkably similar. And today, many of the same signals are flashing again. Global debt levels are reaching historic extremes. Central banks are trapped between controlling inflation and supporting economic growth. Currencies are quietly losing value over time, and investors are becoming increasingly uncertain about where true safety actually exists. Now, here's the important part most people miss. Periods like this don't only create risk, they also create enormous opportunity, because every major transition redistributes wealth, always. The question is simply, who is prepared before the transition fully unfolds? Think about what happens during periods of instability. Most people become emotional, fear increases, media noise becomes overwhelming, and investors start reacting instead of thinking. That's when mistakes happen. People sell valuable assets at the wrong time. They chase momentum too late. They follow narratives instead of understanding cycles. And meanwhile, disciplined investors quietly position themselves while uncertainty is still high. Because they understand something critical. The best opportunities never feel obvious in the moment. If you go back and study major wealth creation periods, whether it was after recessions, market crashes, currency shifts, or inflationary periods, the pattern is always similar. The majority hesitates, the minority prepares. That preparation changes everything. Now let's talk about why this current environment may become especially important. For years, markets operated in a world driven by extremely cheap money. Low interest rates inflated asset prices. Liquidity flowed everywhere. Speculation increased. And many investors became conditioned to believe markets only move upward over time. But cycles eventually change. And when they do, the rules change with them. This is where many people become trapped psychologically, because they continue using yesterday's thinking in a completely different environment. That's dangerous. We're entering a period where preserving purchasing power may become more important than simply chasing returns. That distinction matters enormously, because if inflation remains structurally elevated over time, then holding assets that cannot maintain real value becomes increasingly risky. This is why sophisticated investors often focus on diversification during uncertain transitions, not because they know exactly what will happen, but because they understand probabilities. And this is one of the most misunderstood concepts in investing. Successful investing is not about being perfectly right. It's about positioning yourself intelligently across multiple possible outcomes. The future is never fully predictable, but cycles leave clues. And right now, Several clues suggest that the global financial system is entering a meaningful transition period. That doesn't mean collapse. It doesn't mean panic. It means adaptation. The people who adapt early often benefit the most. Now, here's where things become emotional for many investors. During uncertain periods, people naturally seek comfort. They want certainty. They want guarantees. But financial markets don't reward comfort. They reward discipline. And discipline becomes hardest precisely when opportunity becomes greatest. That's why emotionally driven investors often buy near tops and sell near bottoms. They follow feelings instead of frameworks. But frameworks matter. You need principles that remain stable even when headlines become unstable. For example, understanding debt cycles, understanding currency debasement, understanding diversification, understanding risk asymmetry. These principles become incredibly valuable during transitional periods because they help you remain rational while others become reactive. Now let's discuss something even deeper. Most people believe wealth is built through income alone, but historically, many fortunes were actually built during periods of massive economic transition. Why? Because transitions reset valuations, they shift capital flows, they change incentives, and they create distortions that disciplined investors can recognize before the public fully understands them. That's why periods of fear often plant the seeds for future prosperity. Not immediately, not overnight, but gradually, patiently, strategically. And patience is becoming increasingly rare in modern markets. Everyone wants instant results, instant profits, instant certainty, instant validation. But real wealth creation often requires enduring uncertainty before the rewards arrive. That's difficult psychologically, especially when headlines constantly encourage emotional reactions. This is why mindset matters just as much as strategy. You must learn to think independently. You must learn to detach from crowd psychology. And you must understand that markets are ultimately driven by human behavior more than headlines. Fear and greed. Those forces never disappear. They only change forms. Now, does that mean every investment will succeed? Of course not. No intelligent investor thinks that way. Risk always exists. But the goal is not perfection. The goal is resilience. To build a portfolio and mindset capable of surviving multiple environments. Because survival creates opportunity. People who survive difficult periods with discipline often emerge dramatically stronger afterward. That's true in markets, it's true in business, and it's true in life. And this brings us to the real emergency update. The next several years may become one of the most defining financial periods for an entire generation, not because of one event, but because multiple forces are converging simultaneously. Debt, inflation, currency uncertainty, geopolitical shifts, technological disruption, changing global power dynamics. These forces together create instability, but also opportunity. And the people who educate themselves now, who prepare now, who think long-term now, may look back at this period as the moment everything changed. Most people won't act early enough. That's simply reality. Human beings are reactive by nature. They wait until movement becomes obvious. But once opportunities become obvious, they usually become far less powerful. That's why preparation matters now, not later. And remember this carefully. You do not need to predict every detail of the future to benefit from major transitions. You only need to recognize when probabilities are shifting. That recognition alone can change your decisions dramatically. So instead of asking, what will happen next week? Ask a more powerful question. What trends are likely to shape the next decade? That question changes everything. Because long-term thinking filters out emotional noise. It helps you focus on structural changes instead of temporary distractions. And in my view, the structural changes happening right now are too important to ignore. History rewards people who remain thoughtful during periods when others become emotional. It rewards patience over panic, preparation over prediction, discipline over impulse. And moments like this, they don't come often. That's why this opportunity matters. Not because it guarantees easy wealth, but because rare transitions create rare possibilities. The people who recognize them early often change their financial futures permanently, and the people who ignore them usually realize the shift only after it's already happened. So stay alert, stay rational, study history, protect your purchasing power, think independently, and most importantly, prepare before the crowd understands what's changing, because opportunities like this rarely come twice.
If you enjoyed this video and want more deep insights on wealth cycles, investing psychology, and economic shifts, make sure to like this video, subscribe to the channel, and turn on notifications so you never miss our next analysis. And remember, the biggest financial opportunities are often invisible to the majority until it's too late.